Joining us. Lovaii Navlakhi is with us, MD and CEO, International Money Matters. Good evening, Lovaii. Great to have you with us on the show. Let's get started off then as we wait by for viewer questions as to what your outlook is when SIP returns go down. What tends to happen is, especially with the kind of volatility that one sees in the markets, is that you start losing your money, you start seeing those negative returns and you assume now's a great time for me to pull out because my capital is only being eroded. But does it make sense to stop a safe and measured manner of investing like SIPs when you start losing? What's your view?
Yeah, one great question, and I think that in the current volatile times, if people have started investing in SIPs at the end of last year, they're probably seeing some sort of negative returns and wondering whether it was really a good idea to do SIPs or not. So I actually went back to 2012 July and looked at some of the SIP data, that if I had started an SIP of 10,000 rupees a month in a mid-cap fund, in July 2012, by the time I reached June 2013, I was actually negative. My 1,20,000 was down to 1,12,000, and it started making me think that, really a bad idea. When I looked at the returns, it was showing minus 11%. But had I continued that SIP to 3 years later, that 3,60,000 that I would have put in over 3 years had jumped to 6,35,000. If I continued a further 3 years, that is till June 2018, I would have put in money for 6 years, and 7,20,000 would have almost been something like 14 lakhs of rupees. So the return was 20% per annum over 6 years. And that suddenly made me think that, had I actually jumped off the ship 1 year down the line, I would not have been there to reap the benefits. So when you are entering SIP, you're looking at it from a long-term point of view, and unless there is something dramatic that's happened to the fund or your advisor suggests that you should get out of X and move into something else, really it makes sense to stay put.
All right. So even when the tide is rough, it doesn't make sense to pull out because I think the proof is in the pudding. Lovaii spoke about the kind of returns that you get if you just stay invested. So over a 3-year period, even a mid-cap fund has given smart returns if you had invested. Well, our phone lines are open. If you have any questions on personal finance, on mutual funds, on investing in general, if you're a first-time investor or looking to save up for the future, please call us on the number at the top of your screens. Well, let's take on board our first email query from Subhash. He says, I'm 71 years old and I'm a retiree. I've invested a lump sum in liquid and ultra short-term funds and have started an STP, systematic transfer plan, in the following funds. Please review my portfolio. He's got the ICICI Blue Chip Fund Growth, 30,000 rupees there. He's invested 30,000 in SBI Blue Chip Growth Fund, about 20,000 in HDFC Hybrid Equity Growth, Kotak Standard Multi-Cap. He's got an SIP of about 10,000. He's invested 30,000 in Mirae Asset, India Equity, and Franklin India Tax Saver. It's a lump sum of about 1.5 lakhs. So he's fairly categorical about his portfolio. And he's a retiree, he's 71 years old. How would you assess the kind of funds that he has, the lump sum amount that he's put in? Do you believe that, he's put his money in the correct funds?
So when I look at his portfolio, first and foremost, I think this is a classic example of, an older person willing to take risks in equity. And we should all forget the thumb rule that 100 minus your age is the allocation to equity, because a lot of senior people have met their goals and are willing to take risks from a longer term point of view. So the good thing is that he has chosen a systematic transfer plan, so he's not doing everything lump sum. He's doing it in a staggered manner. He's spoken about one of them, the tax saver, being lump sum. And the only thing I would probably suggest is if he requires that ATC benefit and investing in that tax saver year on year, he can consider an STP even in that, so that the amounts are staggered through the year. I think in terms of selection of schemes, they are sort of good schemes, I think, except for HDFC Hybrid Equity, which probably he can cut down on. Otherwise, those schemes are fine. The Kotak Multi-Cap probably has become a little more aggressive. So as long as his risk profile is sort of met, and he has to keep in mind that with the recent SEBI recategorization, some of the schemes that he has invested in has changed their stance and changed their methodology of investing. He just needs to check that. Otherwise, it seems to be a fairly good portfolio.
I hope you've taken note of the advice that's given. So small size, better managed funds is the need of the hour, and he's given you some recommendations as well. Hold ICICI blue chip, SBI blue chip, exit HDFC hybrid. Well, our phone lines are buzzing. Let's connect with our first caller. We have Major Vijay joining in from Jaipur. Hi there, sir. Thanks for connecting with us on the Money Show. Welcome. What's your question?
Thank you, ma'am. I'm just new investor, ma'am, and I've just started to invest. I've picked up Tata Digital India Fund, regular growth. Then I'm investing in L&T emerging businesses, that is 5,000, and 10,000 for Tata Digital India, 5,000 for L&T emerging business, 5,000 for HDFC small cap.
It's a whole host of portfolios that you're telling us. I honestly suggest that you email us on the moneyshow@etnow.tv. We will get your question answered. But for now, you've given us a few funds, so why don't we go with that? Lovaii, I'm sure you heard him out. Give us a sense. But first, I want to ask you, Mr. Vijay, do you have any specific goal in mind?
No, ma'am, just a value creation, ma'am.
Okay, and how old are you?
34, ma'am.
Okay. So let's find out if you think his selection is appropriate, and do you believe that he needs some sort of snips and changes?
Axis, this multi-cap Axis also have started, ma'am.
Axis multi-cap.
Mid-cap.
Okay, fine. So we'll try and get you an assessment of your portfolio. Lovaii, whatever you picked up, go ahead.
Yeah, so I think first and foremost, what is important is to define that if I'm going to create value through mutual funds and I'm willing to take risk and therefore I am in equity, that's the first thing to assess. The second thing is to then decide where are you going to put your money. Is it going to be large cap? Is it going to be mid cap, multi cap, etc. And since he mentioned that he's a first time investor, I would sort of advise a bit of caution on his investment. So he did mention a few multi-cap and mid-cap funds in his portfolio. The other thing I did notice is that there was a whole bunch of investments of 5,000, 10,000 different amounts. And I think the need to over-diversify is probably a bit too much. You need to just pick up 2 or 3 schemes. And normally it's good to go to an advisor while you think that it's cheaper for you to do it on your own. You are still in a regular plan. It's a little more expensive plan than a direct plan if you're doing it on your own. So you need to look at that and sort of cut down the number of schemes that you are investing in. Some of these I have, we don't review, so I don't have a view on some of the schemes, and I don't want to partially tell you some scheme is good and the others I don't know. So it's best, as Aman mentioned, that you email ET Now and you'll probably get a more comprehensive answer.
I hope you've taken note of all of the advice that's been given. He's given you his advice on individual funds, but not tracking all of them. And it's important that you do consult a financial advisor, especially since you're a first-time investor. And as I suggested, Vijay, it's a very simple email ID, themoneyshow@etnow.tv. Send us your entire portfolio, tell us your goals, and we will get it answered next week. Well, we have another Vijay on the phone line. This time he's from Hyderabad. Mr. Vijay B is connecting with us. Hi there, sir. What's your question, and tell us how we can help you?
Yeah, good evening, madam. I want to invest in mutual fund for long term for a retirement plan.
Okay.
Minimum 3,000 to 4,000 I will invest every month. Can you tell me the good funds?
And how old are you currently?
No, madam, I did not holding any funds. I want to...
No, what is your age?
39.
All right. So looking to invest for his retirement, he wants to start by putting in about 3,000 to 4,000 rupees. Any recommendations that you have for the long haul that would be appropriate for him to start? I'm not clear as to what his targeted corpus is, but would you have any recommendations, Lovaii?
Yeah, so I think if he's starting with this 3,000 to 4,000 rupees, he mentioned, I think, age 49. I'm assuming his retirement is 10 to 15 years away. So he has a long-term time horizon. Probably been attracted to mutual funds, looking at past returns and the whole media blitz that's happened around mutual funds. So if it's 3,000 to 4,000 rupees, probably, and a first-time investor, good idea to maybe look at some sort of index fund. Maybe a UTI Next 50 type of fund is a good fund to have. So that basically is investing in not the top 50 companies, but the 51 to 100 ranked companies in India by market capitalization. And it's an index fund, so it's a bit passive to that extent, but that will be a good start for him to make. Once he experiences this over the next 1 or 2 years, then he can always look at adding more money, because I am guessing that 3 to 4,000 and he's based in Hyderabad may not be sufficient if that's all that he's investing. I'm sure he has other corpus as well. So need to look at the whole thing to advise whether the retirement corpus will be enough. But to start with, maybe an index type of fund.
All right, I hope we've got your question answered. An index fund would be appropriate for retirement. Arjun is with us from Visakhapatnam. Hi there, Arjun, thanks for connecting with us. Tell us your question.
Yeah, I've invested a lump sum in HDFC Prudence Fund last year, and it has given negative return. Now it has changed its name to HDFC Balanced Advantage Fund.
Okay.
So, any suggestions that you would like to give me? Should I switch over?
Yeah, we'll certainly help you out. You know, assets of about 36,400 odd crores, and since it's launched, it's gained about 17.5%. Lovaii, it has, you know, names like Infi, SBI, NTPC, GAIL, etc. But he's a little bit concerned about the returns. So what exactly would you like to tell him?
So couple of things. One is that, you know, investing in anything in a lump sum is probably fraught with risk, and he's sort of facing that. Probably since you mentioned last year you've invested at a time when there was a big boom and a runaway sort of market, and now you're seeing the impact of the negative. The other thing that has happened, as you also mentioned, that the name is changed now, which is part of the SEBI recategorization, and as a result, some of what the scheme was intending to do earlier is not what it's going to do now. So the returns may actually dip. The fund is also very large in size, so the ability for it to be flexible is sort of limited. My suggestion is that you sort of wait for a rally, which some bit of it is already happening at this moment as we speak. And once you cross the 1 year period, it will become long term. And at that time, you might be better off in sort of getting out of that fund. But again, suggestion there is not to get out in lump sum. Do it in a staggered manner. So again, in case the fund actually value goes up, you've not missed out that rally. And then decide what your time horizon is for investing. Because I'm guessing that you had a longer term horizon when you got into the fund. But less than a year later, you're sort of worried because it's negative. And in some way, it was answered in the first question that we spoke on about SIPs and just staying put for a longer period of time. So markets do recover. And if you have a longer term horizon, this fund might be fine, but really you have to wait and watch.
All right. So I think, you know, if you're tuned in at the beginning of our show, we were talking about SIPs and not making enough money there. Investors get very concerned. But, you know, the view is that for the long haul, it is the most important to stay invested. You've got the stamp of approval on this fund, so just be a little bit patient. I'm sure you will reap gains in the long haul on this one. Thanks, Arjun, for your question. And of course, if you want to send us your detailed portfolio, simply email us on themoneyshow@etnow.tv. For now, we have another email query from Krishika Chimbaikar. She says, I wish to invest 3 to 5,000 rupees per month in mutual funds over the next 3 to 5 years. Please advise some good fund names for good returns. So I don't really know her profile in terms of how old she is or if she has a specific goal in mind, but I think just by and large investing, saving up. As a first-time investor, do you have a few funds in mind?
Yeah, so with another viewer question, we spoke about UTI Next 50. In this case, probably if I was to look at a large cap fund, then maybe ICICI Focus Blue Chip is one alternative where you can put in the money. And when you have an amount like 3 to 5,000, sometimes it's sort of not advisable to over diversify. So put 2,000 in one fund, 1,000 in another may not be such a great idea. So doing 3,000 rupees in this ICICI Focus Blue Chip may be fine.
All right, so it's a small sum that you're looking to invest, so don't over diversify. You've been given some fund names as well that you can look to invest in, and as I said, if you do have a specific goal in mind, if you do want to know what to invest in, you have a portfolio that you want to share with us, email us on themoneyshow@etnow.tv. For now, we take a quick break, come right back. Lovaii is still with us. We have our fund review coming up. We'll be giving you advice on the Franklin India Primer Fund, as well as answering more of your questions. Our phone lines are open. Welcome back. This is the Money Show. Our phone lines are buzzing. Lovaii Navlakhi is with us to answer all your questions. But as I said, before we take on board any more queries, we've got our fund review for the day. So, Franklin India Primer Fund. Is it hot or not? What have you made of the performance? Do you believe that one should invest in it? And of course, Lovaii, we want to know, what is your rating on 10?
So I think Franklin India Primer Fund has performed really well over the long period. Probably started in 1993, if I'm not mistaken, and has spent more than 25 years. Is a mid-cap fund, tends to take a little less risk in that space, pretty diversified. And I think that it is a good fund to invest in. So we would rate it anywhere between 7 or 8 on 10.
Okay, 8 on 10. That is the verdict coming in on Franklin India Primer Fund. Nishant is with us on the phone line. Let's quickly connect with him. Hi there, Nishant. What's your question?
Hi, this is Nishant from Kolkata. My question is, I'm holding two funds. One is large cap, which is SBI Blue Chip, and another one is Motilal Multi-Cap 35. Motilal 35, Multi-Cap 35. So I have been holding these two funds for maybe 10-11 months, and on my portfolio, both are indicating in the red, like I'm getting a loss on both. So should I continue with the same funds, or should I shift to another funds? Because I have a horizon for another, I can keep on investing like this and maybe more for another 8 years.
All right, we'll help you out with that question.
Any other fund you can suggest me, like to get into another fund, the third one? So I'm looking for another one.
Long-term time horizon, and apart from reiterating what you've been saying, that funds do go through a bumpy ride, especially with the market volatility. Lovaii, do you like SBI Blue Chip and Motilal Oswal Multicap?
Yeah, I think both these funds are good funds in their category. So first and foremost, his investment, while they are showing a red in his portfolio, many of the other funds in the same time horizon would also have shown a red. So it's not that this fund has become red, I mean, is negative, and there would have been many other funds which are positive. That's number one. In terms of his allocation, SBI Blue Chip is a large cap fund. The Motilal mid-cap, multi-cap 35 is a multi-cap fund, as the name suggests. So he has got some diversification, and the multi-cap fund would have had larger investment in mid-cap as compared to SBI, and possibly shows a higher negative return in his portfolio at the moment. But that's because the mid-cap and small-cap indices have fallen a lot more during 2018. Both these funds are good funds in their category. So if he has a longer term horizon, he can possibly continue investing in them. If he wants a third fund, I'm wondering whether he wants something with higher risk or lower risk. And at this point in time, if he wants something with lower risk, then, as suggested earlier, UTI Next 50 is an index type of fund, and that's something that he can invest in. If he's looking at something in the mid-cap space, then possibly an L&T mid-cap is one such name I can think of where he can put some money. And I'm sure there are other funds as well. So he can look at increasing his sort of risk. Just one sort of caution to him is that if he's thinking of a mid-cap fund at this point in time, possibly over the next 12 months, he might not see any great return. But it may be a great time to build a portfolio for the next 3 to 5 years in that space. So it depends on his profile, what he really wants to do.
I hope we were clear with our advice, and do remember, if you want to have a more specific view, do you have more details to share with us, just simply send us an email on themoneyshow@etnow.tv. Meantime, Ashish is with us from Bengaluru. We aren't even able to take all our email queries because our phone lines are just going off the hook. Ashish, hi. Welcome to the Money Show. Tell us, how can we help you?
Hi, this is Dr. Ashish here. I'm 42 and I have a query regarding my PPF amount, which would be maturing in the next few months after 20 odd years. The maturity amount is in excess of around 21 lakhs. Considering that the interest rate in PPF is coming down and not as attractive as before, would you suggest that I continue to stay invested with the safe but low interest option? And if not, where could I invest the bulk amount to maximize return? I'm equally invested in equity mutual funds since the last 15 years. I also have adequate term and medical insurance. I have a pension plan since the age of 27, and my long-term perspective is around 10 to 15 years for this bulk amount.
All right, so very extensive details about his overall profile and portfolio. But the main question is the PPF is maturing after 20 years. Is this adequate for him? Should he look at any other avenues? What is your assessment, Lovaii?
So the first thing he mentioned that the PPF rates are coming down, and I think that is going to be true of many other fixed income rates as India gets more and more developed. Interest rates will come down, although right now the view is that over the next maybe 12 to 15 months, interest rates may not come down, they may actually go up. So my suggestion is that when he is looking at this investment, the other thing to look at is the rate of return and the tax implication. Since this is virtually a tax-free type of investment, he has to find whether there are other alternatives with similar post-tax type of return. And over the possibly the next 9 to 12 months, maybe that there aren't too many other options without taking too many risks. So my suggestion is that he should roll over this PPF. The good thing is that once you roll over, there is no sort of time limit that you have to hold it for the next 5 years. If there are opportunities that are available for investment for him, he can always pull out part of the money and use that money for investment into those alternatives. He looks to be a very sort of well-seasoned investor. I'm assuming he's getting good advice because he does have a range of products. And rarely you hear people on investment shows saying, I have enough term insurance, medical insurance, which is a really good thing that is already in place. So if that's all there, then I would suggest at the moment roll it over. And thereafter, if there are opportunities that come up, maybe in a year later or 9 months later, he can always use part of the amount.
Right, that's the outlook coming in, and I hope we were able to answer your question. Do send us an email query on the moneyshow@etnow.tv if you have any more questions. Next up, Jay has emailed us. He says, I'm 72 years old. I have about cash of about 15 lakhs from fixed deposit maturity. Where should I invest to earn a regular income? What is your advice?
Yeah, so I think that in this case, if, and he mentioned that he's 71 or 72, so he does have a higher sort of tax exempt limit. If he is not in a tax slab, then, fixed deposits may not be such a bad investment because you want some element of safety at this point in time. However, he needs to look at the post-tax return. So if he's in the highest tax slab, then getting, even 7% or 7.5% as a senior citizen, he'd probably be getting only 5% post-tax. And then there are alternatives at this moment in time. On the debt fund side, he could consider things like arbitrage funds or equity income funds or even short-term funds at this point in time so that he's in the similar sort of risk profile. I'm assuming he doesn't really want to increase his risk or change his risk profile. So I'm not looking at any equity funds for that.
All right, I hope we were able to answer your question. And before we go, your quick tip of the day, Lovaii, what exactly is the advice that you'd like to give investors when it comes to smart investing?
So I think and we've covered this in some of the questions that came today. I think the big change that has happened in the last few months is SEBI recategorization. So many of us tend to look at, star rating and, research coming out of websites. The issue is that some of the schemes and the funds would have changed their nature going forward. So there may no longer be a long-term track record that you can go by. And at a time like this, really it does make sense, biased as it may sound, to go to an advisor because he understands what are the changes that have happened in the allocation, and then look at where you want to invest going forward.
Right, that's the advice coming in, and do remember that even if you see star ratings and past track records of mutual funds, it might not be that relevant today. Thanks very much, Lovaii. We've bombarded you with a whole host of questions. Our phone lines have been buzzing non-stop, and I want to reiterate to our viewers, just because we couldn't take your queries today does not mean that we won't. Tomorrow, we will have the Money Show. Do email us your questions on the Money Show at etnow.tv, and we will help you out. Thanks so much for watching.